Opendoor just delivered another wild ride today, and for anyone watching, here's why I remain firmly bullish, not just for Monday's open, but potentially for the entire week ahead. Let's talk market action. The stock initially ran as high as $5.87, and that's not small. Huge volume drove it all the way up, signaling real commitment from buyers. But, as expected, once those gains piled up, some investors took profits. We saw that early afternoon sell-off that pulled shares down to end at $4.54, off about 9% from that high. Notably, that selling came on much lower volume. That tells me this pullback is more a routine cooldown than a reversal signal. Volatility is baked into Opendoor at this point. Moves of 5% or more are almost expected now. You might recall recent stories detailing its extreme swings, where rapid rallies give way to sharp retracements every few days. Yet, the pattern consistently repeats, and each dip gets bought. What that tells me is simple: this is not random speculation, it's retail conviction meeting structural shift, and those two rarely dissipate quickly. Now let's add the macro angle. Jerome Powell's message at Jackson Hole last week was unambiguous: rate cuts likely in September. That changes everything for the housing sector. Lower mortgage costs breathe life back into home buying, and by extension, into companies like Opendoor that are engineered to profit from transaction activity. The macro backing is shifting from headwind to tailwind, and rapidly. Retail enthusiasm remains at full throttle. Eric Jackson, after 5 days outside Drake's mansion pushing the rapper to invest $100 million, keeps Opendoor center stage in social conversation. On top of that, Anthony Pompliano continues to champion the idea of a retail hive mind, positioning shareholders as an active force in the company's evolution. That kind of energy doesn't ebb, it amplifies. In fact, Pompliano just delivered a compiled letter to the Opendoor board, full of concrete retail-backed ideas for strategic evolution. They're advocating for a CEO who understands scaling, pivoting to asset-light operations, deep AI integration, agent network expansion, and app development. These aren't your typical retail memes, they're serious managerial prescriptions for transformation. Jackson's more analytical vision, expressed on the rundown, really stuck with me. Opendoor isn't just another listing platform like Zillow, which tightly controls the agent ad model. Opendoor starts at the seller. Without suppliers, there is no marketplace. That puts the company in a powerful position to redefine the housing ecosystem, just like Uber did for ride-sharing or Airbnb did for lodging. And that's where the AI angle comes in. Acting CEO Srisha Radhakrishna called AI a core primitive for the business. Tools like Repair Copilot and Risk AI are already live, and they strengthen the foundation of what could become a truly scalable, asset-light model. This is not speculative tech jargon, it's operational enhancement. Stack all of these pieces together: monumentally strong retail sentiment, macro alignment with housing-friendly rate policy, a disruptive supply-first business thesis, and tech infrastructure beginning to take shape. That's what gives me conviction that today's dip is just a breathing pause, one that smart buyers will use as a launch pad. Short interest remains high, so another aggressive move could fuel a fresh short squeeze. Conversations with institutional investors, Korean or otherwise, may signal deeper capital validation soon. Crypto integration chatter still floats around the edges, too, and could provide another speculative layer of upside. So what should you watch for heading into Monday? Primarily, I'll be watching how Opendoor handles the $5 level. Last week's breakout drew a clear line. If Monday reclaims and holds $5 with volume, that will reconfirm this isn't a temporary spike, it's a new baseline. If we see dips, I expect buyers to step in quickly. And if we see strength early, we could easily test $6 or even $7 before any real resistance accumulates. In short, today's decline was expected, manageable, and even healthy. It burns off short-term exuberance and resets for higher highs. The broader narrative remains intact. Retail is galvanized, the macro is aligning, and Opendoor's strategy is evolving toward a more scalable, seller-first, AI-powered model. In a market that often chases hype, Opendoor feels different. It's a movement grounded in activism and strategy. And with multiple tailwinds converging, I believe Monday's open won't just affirm Friday's breakout, it may accelerate it.